Home sales in Durham region dropped 23% in August, and overall this year, sales are down 11% year to date compared to the same time in 2024. But that doesn't mean that buyers have disappeared. In fact, people are still out there viewing homes. So why does the market feel slower than ever right now? Let's break it down. If you're new here, my name is Jessie McClellan, and I'm a realtor here in Oshawa, Ontario with the Lisa Abbott team. And if you like videos like this, make sure to subscribe to the channel. You can also book a call directly with me using the link in the description if you have any questions about buying or selling a home in Durham region. I'm going to quickly run through the numbers and then we'll talk about why some of these things are happening. The number of homes listed in August was down 18.6% from July. Sales also dropped 20.6%, and our active listings took a bit of a hit as well, dropping 4.2%. Even with the decrease in new and active listings, our months of inventory for Durham region has now hit 4, which I'll talk more about in a second. Our sales to new listing ratio didn't change all that much. It's sitting at 40.4%, which is still very low. Average days on market is up to 27 days. The sale to list price ratio is down to 98%, and our average price dropped another 2.7% and is now sitting at around $860,000 for Durham region. August is always a slower time of the year, so keep that in mind when we're looking at these numbers. It's kind of like December, just not to the same degree. Now, going back to months of inventory, I don't think people realize just how significant it is that Durham region overall has 4 months of inventory right now. Looking back at the data since 2010, we've never hit 4 during that time. Realistically, we're probably talking about 20 to 30 years since we've seen months of inventory this high. That being said, this is August. It's likely we'll see some sort of an uptick in activity in September or October that could eat up a little bit of that inventory. But we've also had a very high number of terminated listings this year, and I expect a lot of those to come back onto the market. So I'm really curious to see where things go over the next 4 to 8 weeks. Despite months of inventory just creeping into official balanced market territory, our sales to new listing ratio has been very low, suggesting a buyer's market all year. But it can take a while for months of inventory to build up, so don't just lean on one piece of data to gauge the market conditions. Another data point people tend to skip over is the sale price to list price ratio. At 98%, this is the lowest we've seen since pre-pandemic levels in 2019. For the vast majority of the last few years, we've sat well above 100%. So why does the market feel so slow right now for anyone selling a home or for agents working in it day to day? Well, year-to-date, sales are down 11% compared to the same point last year, but showings are only down 6.5%. In fact, showing activity has stayed pretty steady throughout the year so far. There are a couple of reasons it still feels slower though. The first is that even though the total number of showings is only down 6.5%, those showings are spread out across 29% more listings than we had at this time last year. That means there's less competition per property, which is contributing to things like longer days on market as homes take more time to sell. But there's another reason too. A lot of people are shifting to renting. Unfortunately, at a time where interest rates are relatively low and prices have come down a lot since the peak, renting is still looking like the more sensible option for many potential buyers right now. Showings for leases are up 28.6% year to date compared to last year, and the number of MLS lease transactions is up 19%. This shows that it's not a lack of people wanting to live here, and it's not a lack of buyers interested in Durham region. People are still viewing homes, they're just not finding something that makes sense to buy, so they're shifting to renting instead. Buyer mindset has shifted drastically over the past few years. We've gone from a fear of missing out to a fear of overpaying, and because buyers are watching the market move more in their favor month after month and year after year, they're perfectly okay with renting and waiting. They could be waiting for economic stability, changes in interest rates, job security, price stability, or any combination of those factors. But there's still a clear gap between what many sellers expect their homes to sell for and what buyers are willing to pay right now. In August, only 23% of listings sold above their list price. That means less than 1 in 4 homes successfully priced low, held offers, and got a deal that the seller was happy with. Even in a normal, healthy market, there will always be some percentage of homes that sell over asking, but 23% is the lowest that we've seen since pre-pandemic levels in 2019. At the peak of the market, we saw as high as 94% of homes selling over asking. So that list low, hold offer strategy is continuing to become less and less effective. Later this month, we've got another Bank of Canada rate announcement. A lot of people are expecting a 0.25% cut, and the question is, will that spark the market? And honestly, I doubt it. If 7 previous rate cuts didn't turn things around and prices have continued to slide, I wouldn't expect this one to be any different. It's not going to change affordability much at all unless you're on a variable rate mortgage. Sure, it might shift buyer confidence slightly, but interest rates aren't the main reason that the market has slowed down. The market slowed down because affordability has been tough for years. Unemployment is rising, the cost of living has jumped, inflation has been an ongoing challenge. Now there's trade wars and tariffs. There's just so much more driving buyer confidence right now than what the Bank of Canada is doing. Maybe there's a scenario where the market's already priced in a rate cut, and if it doesn't happen, we see an uptick in mortgage rates. That could encourage some buyers with expiring pre-approvals to jump into the market and create a mini spike in demand, but that's all hypothetical, and I'm really not expecting much to change because of this rate announcement. We will probably see an uptick in activity in September or October seasonally like we normally do, but I wouldn't expect to see a noticeable uptick in prices at all, likely just more listings and more sales. My advice for anyone thinking about buying or selling a home in the near future is this: don't let people who don't have anything at risk influence your decision. Don't listen to some anonymous person online telling you to wait until prices drop so far that you can trade a basket of raspberries for a house, and don't listen to a realtor or a mortgage broker telling you that you absolutely have to buy right this minute before it's too late, because both are trying to create a fear mindset. Educate yourself on where the market is. Look at your personal situation and make an informed decision that puts you and your family first. Whether that means renting, buying, selling, or holding off, you're making a big decision that's going to impact your future and your lifestyle for years to come. Now, from a buying perspective, I do believe that if the numbers make sense, you find a home that works for you and it fits your lifestyle for the next 5 to 10 years, that of course, being in the market and paying yourself and building equity each month is better than sitting on the sidelines when possible. But you have to make sure that you're working with an agent that you trust, because they'll provide the recent sales data and information you'll base your decision on. There's no reason to overpay in this market, so make sure you're getting something that makes sense. If you buy a home for a fair price in a good area and it fits your needs, lifestyle, and budget, you're probably not going to lose too much sleep over interest rate changes or short-term price fluctuations, because you bought it for your life, not as a quick flip. On the other hand, if you're pressured into buying a home that doesn't work for you, you overpay, and you're stretched financially, every little fluctuation in the market will drive you crazy. Remember, these short-term ups and downs are just theoretical numbers until the day you go to sell. And if that's 5 to 10 years down the road, you're more likely to have built equity and hopefully appreciation of the home's value. We can talk all day about timing the market, and I'll always give you my honest opinion. If the market's slow and frustrating for sellers like it is right now, I'll tell you that. But at the end of the day, you need to look at where you are, where you're trying to go, and what's happening in those areas. You're rarely ever going to be selling at peak value and then buying at the bottom. When the market you're selling in is what you're buying in, if the market's slow on the selling side, it will favor you on the buying side. But if the market's hot and competitive on the selling side, you'll be paying for it on the buying side. Unless you're an investor trying to sell at the very peak and cash out and run, most people are moving because they need to. Whether it's upsizing, downsizing, relocating, or anything else, focus on your own situation and make sure it all makes sense for you. If you've got questions about your situation or the market here in Durham region, you can book a call directly with me using the link in the description. If you found this video helpful, please give it a thumbs up and subscribe to the channel to stay up to date on everything happening in Durham region. Thanks so much for watching, and I'll see you in the next one. Bye.